Hey everybody, it's Ryan. Welcome back. Welcome to the Investing Channel. In today's video, we're going to talk about what happened yesterday in Mexico. I don't know if you guys have been watching the news, but the Mexican government took out one of the top cartel members out there, and things have been going crazy. So I wanted to share with you guys some of the footage of what's been going on over there, and also tell you about how that might affect the markets. So let's go ahead and let's get started. All right, thanks.
Something significant just happened in Mexico, and it's making headlines around the world. Over the past several days, reports confirmed that Nemesio Oseguera Cervantes, better known as El Mencho, the longtime leader of the Jalisco New Generation Cartel, was killed during a major security operation. Almost immediately after that news broke, violent retaliation followed. Roads were blocked, vehicles were burned, and disruptions were reported across multiple regions. Flights were delayed or canceled, and embassies issued safety warnings for travelers. Now, most people see this as a crime story or a geopolitical headline, but investors should see it very differently because events like this rarely crash the stock market, yet they can quietly change how money moves across the global financial system. And understanding that distinction is critical for smart investing. This isn't about politics and it's not about taking sides. This is about risk, capital flows, and how financial markets respond when uncertainty shows up. Here's the key thing many investors miss: markets don't react emotionally. People do. When uncertainty increases, even briefly, capital begins adjusting before headlines flood social media. That adjustment often happens quietly, and it happens fast. One of the first places you can see this reaction is in currency markets. Emerging market currencies, including the Mexican peso, tend to weaken during periods of geopolitical or security stress as investors reduce exposure. At the same time, capital often rotates toward perceived safe haven assets. The US dollar, US Treasury bonds, sometimes gold and silver. This isn't panic, it's risk management, a core principle in macro investing and portfolio allocation. Foreign exchange markets often move faster than stock markets. They don't wait for earnings calls or analyst notes. They respond to perceived risk in real time. When it comes to the stock market, events like this usually don't have a major impact on broad indexes like the S&P 500, Nasdaq, or Dow Jones. But that doesn't mean nothing happens. Specific sectors can feel the effects: travel and tourism stocks, transportation companies, Mexico-focused equities, and exchange-traded funds. Not because earnings suddenly changed overnight, but because market sentiment and risk appetite did, and financial markets always price risk forward, not backward. This is where many retail investors get caught off guard. They focus on the headline itself. Professional investors focus on how capital reacts to the headline. They watch currency movement, bond yields, volatility measures like the VIX, and capital rotation between equities, fixed income, and commodities. They're not asking whether the story is scary, they're asking whether it changes exposure. Like most of the time, those changes are small, but small adjustments add up over time. The real lesson here isn't to trade the news, it's to understand context. News creates volatility, systems manage volatility. That's why successful investing and trading isn't about predicting chaos. It's about preparation, process, structure, risk control. You don't need to forecast the next crisis. You need a strategy that works when uncertainty shows up. Because events like this will continue to happen, the investors who survive and thrive aren't the loudest. They're the ones who understand how money actually moves. If this helped you see markets more clearly, make sure you're subscribed. I break down investing, trading, and financial markets the way professionals actually see them.